The State of Crypto is presented by Tron, connecting the world to the power of cryptocurrency.
Mining company Digital reported its latest quarterly earnings results this week. The company earned 318 Bitcoin during Q2. That's worth about $9 million or so. Joining us now to discuss is Digital CEO Sam Tabar. Welcome, Sam.
Thank you for having me.
Thank you for being here. So in your report, you said some factors that are involved here that you're facing include relocation of miners, of some miners, curtailing activities, and there's also the growth of the overall Bitcoin hash network hash rate. These are all headwinds, basically. So, what's the strongest of them all? You think as a potential problem coming up in Q3?
Well, I think the biggest headwind would obviously be the price of Bitcoin. That's a macro factor that we can't control, but what we're able to control, we've done very well on. So with respect to our fleet, we're now at 99% carbon free. That's carbon free, not carbon neutral. There's a big difference. And we've led the way in the industry with being very environmentally responsible while running a very good business. We've added 35 megawatts to our mining capacity. We've announced the purchase of miners to fill that capacity. We've even revised our goal. Earlier this year, when I took over as CEO, we announced a goal of 2.6 exahash. We're doing very well on that. In fact, we've just revised our goal just a couple of days ago. We're now at 3.5 exahash by the end of this year. We have a very, very pristine balance sheet. We have 65 million of liquidity on the balance sheet, so we're very flexible going into the halving. And we're diversified across jurisdictions. We're now in Canada, the United States, and in our last quarter, we announced our entry into Iceland, which the Wall Street Journal reported on the front page not too long ago. And that's in response to just being diversified from a jurisdictional perspective. You never know what will happen in one single country, and we don't think it's prudent or responsible to have all your mining operations in one country, because the politics when it comes to crypto can change overnight. And we don't want the rug to be pulled from under us.
Well, so you mentioned non-carbon. So this is mostly, what's the breakdown? Is it solar? Is it geothermal? Is it hydro? What's your breakdown on your source of energy?
Sure. So in the United States, the primary source is hydro. We draw power from the Niagara River and so on. So in the lower state of New York, it's fossil fuels. In the upper state of New York, it's hydro.
The Robert Moses Dam in Messina, which has been producing nothing but cheap electricity. But you do have a New York State which is kind of hostile to production of Bitcoin, even though they're basically giving away electricity up there. You're in Messina, correct? Or
yeah, we have a couple of locations in New York, but with respect to the political stance, it's been very safe. But you're right. In some parts of the states of New York, it's a little bit more hostile. The trick is to just play by the rules, obey the laws, have the right permits, and so on. But to answer your question, because I want to make sure I'm answering all your questions, with respect to Canada, we draw power from hydro. And in Iceland, I'm sorry, I didn't mean to interrupt.
I'm sorry for interrupting, but what provinces are you in Canada?
We keep that undisclosed.
I'm assuming I assume they don't always speak English there.
Canada is a bilingual country.
It is multilingual if you count the First Nations, and then Iceland. It's just one big place, and hydro, I assume. Geo?
Yeah, so Iceland is a unique country in that 100% of its energy is sourced from hydro and geothermal. Geothermal is volcanic power. So we draw from that, from both, and we draw from excess energy that would not have been used otherwise. So we're not competing with anybody in Iceland. We'd simply buy non-guaranteed power. That's power that households and industries would not really be in a position to buy, because Bitcoin miners are in this unique position of buying non-guaranteed power. What does that mean? It means that one day you can get a phone call and they'll say, from the power company, and they'll say, today you're not getting the power. We have to use it for other purposes. And we agree to that. But most industries couldn't be in that position. They need guaranteed power. A household can't have non-guaranteed power. But we're in a unique position to buy excess power, non-guaranteed power. This is kind of a power product that people would not buy except for Bitcoin miners. So we're happy to buy that.
Well, I don't mean to interrupt, Jen, but this is for your sake. She's in Ontario. How come you can't tell her where the mining facilities are? I mean, why is it a big secret in Canada? I mean, Ontario deserves some love if there's anything there.
We keep our centers so just to let you know, the way we work is we don't own the actual operating centers. We have host agreements. We're tenants to the hosting partners, and we do that to keep our infrastructure light. So we just pour our money into buying the machines, and then we find hosting contracts with local operating partners. So these are not our facilities. These are facilities that we have contracts with, and we put all our money in buying machines. And that way, we're trying to provide very high shareholder return by putting money where there's high return, which is the machines, as opposed to real estate. So that's one of the reasons why I'm being somewhat coy on the actual operations, because they're not actually our operations. They're operations we have hosting contracts with. And we're very nimble and dynamic. For example, in the last quarter, it was a transitional quarter. We reshuffled our entire portfolio from partners to partners. We have a number of different partners. And we did that. One of the reasons, there are two reasons: for economics. So we get these local operators to compete with each other on economics, but also our North Star is sustainability. So we want to make sure that we are contracting with partners and we get out when we see that it's not renewable. So that's another reason why we begin to reshuffle these partners. So what I say to you today, if I were to tell you that it was in Yukon, it's not in Yukon. It would be very different. It could be very different tomorrow, because we constantly reposition and source new operating partners to optimize the fees, to make sure that everything is sustainable.
But how will you know it's not carbon?
How do we know if it's not carbon free? We do due diligence. We send our field engineer, and we have this long list of diligence, and we make sure that they're sourcing from a renewable source of power.
All right, and Sam, we've been talking about this kind of decentralization of your mining operations for this whole interview. The U.S. Treasury Department proposed recently a 30% excise tax. Just from your perspective and operating in all these different jurisdictions, what is the most friendly when it comes to crypto mining? Where do you think other crypto miners are going to follow suit and set up operations?
Well, it's funny you say that. When that announcement came on, that's when we decided, you know what, we should diversify our fleet even further than just the United States and Canada. So we, as a public miner, we have a fiduciary duty to our shareholders to make sure we manage jurisdictional risk. So when that announcement happened, we announced that we're going to send new miners to Iceland. And that was a huge story. The Wall Street Journal, as I mentioned, did a front page story because it was in reaction to that particular announcement. I realized that threat has now receded, and they're no longer talking about that tax. But that's a very good classic example as to why it's very important for Bitcoin miners, particularly public ones, to have jurisdictional diversification.
Would you consider leaving the U.S.?
Well, Bit Digital was originally had its fleet originally in China a number of years ago. And we started to migrate our entire fleet from China to the United States because we felt that there could be a jurisdictional risk. And indeed, we were right. By the time we were in very advanced process and migrating the entire fleet, we're talking tens and tens of thousands of machines from China to the United States, China banned Bitcoin mining. So that's why we're very allergic and very sensitive to having all our eggs in one basket. And when we heard about this tax that President Biden was talking about with respect to a 30% tax on this particular industry, I realized that that threat is no longer around. But when that talk was occurring a few months ago, we took it very seriously, which is one of the reasons why we entered Iceland.
All right, Sam, we're going to have to leave it there. Thank you very much for joining us this morning.
Thank you for having us.
That was Bit Digital CEO Sam Tabar.